Well, they just did it. The Bank of Canada dropped the rates to 2.5% as of September 17th, 2025. This is the first cut that they've had in 6 months. And if you're a buyer, a seller, or an investor in the London, GTA, Southwestern Ontario, Canadian, or even national real estate market, this may have an impact on your decisions that you're making moving forward. So in this video, I'm going to cover what is shifting and where your opportunities might lie. At a national level, Canada just passed a real turning point. The BOC's 25 basis point cut to 2.5% was motivated by softening job data, declining export investment, and lower inflation pressures. This definitely signals more relief for borrowers, but also more caution in pricing and valuation expectation. It's not predictions anymore, it's actual action. And I do think we are already starting to see that rippling into local markets. We are a very active real estate team located in Southwestern Ontario. We sell in places like London, Grand Bend, Port Stanley, and being boots on the ground in this market sector gives us the ability to translate to you that the conversations we are having on the phone with people inquiring on properties is very different than it was even a month ago. If you follow our market updates, you'll know that before Labor Day, it was actually very quiet, but then after Labor Day, all of a sudden, deal and offer activity ramped up. Many people weren't even expecting a rate cut. If you were one of those people, jump in the comments and let me know. But the fact that they actually cut the rates changes things for people that have had mortgages in place for a couple years and have definitely felt the pressure of higher rates, as much as it's changing some of the dynamics for people who are looking to get into the market. Definitely first-time home buyers. I find anybody under that $1.5 million price point, it's definitely going to impact. As we get to the higher price points, north of $2.5, $3 million, and obviously agriculture, farms, because you're dealing with a lot more cash purchasers, but I'll dig into that in another video. Now for buyers, they definitely have a clear line of sight on lower variable rates and possibly better fixed term rates ahead. Now sellers, I still think you need to be very mindful of expectations, and list price and presentation matters now more than ever. You're still going to see cautious buyer behavior and people don't want to catch a falling knife even though the rates got cut. To be truthful, we've seen that for the last 2 or 3 years. And our job is never to push people into a sale or a purchase, but we are there to consult on the buyer or seller side, and our advice will be massively different depending on where we are in a transaction. For example, on the seller side, I have received 6 offers on different properties in the last 48 hours, and guess what? The majority of those offers were hundreds of thousands of dollars, if not 20% under where we were actually listed. That is absolutely commonplace, and the worst thing you can do is not counter those offers, because the proof is 60 to 70% of those buyers were actually real buyers, because through effective negotiation, we were able to get some of these offers actually very close to list price, and that may shock you considering where some of these offers started at. Now on the buyer side, make offers. If you're an investor and you're looking for value add opportunities, do not be scared by list price. As long as you're coming to people with reasonable offers and strategies, you'll be surprised that there are some real sellers out there. You may think they're crazy because of their list price, but unless you make an offer, you may be seriously disappointed when that seller sells to somebody else at a price you would have actually paid. Now for investors, I think this could pull forth demand in certain asset classes where financing costs are a key component, and it may reanimate deals that were on hold waiting for some policy decisions. Now I want to give you some sales data because I think it'll be helpful. In London Middlesex, August brought 616 sales, up 10% year over year, and inventory is at a decade high. We see a boatload of inventory, but sales are increasing because sellers are dropping their price. So you may read headlines saying prices are going down. Well, that's because sellers are trying to find the market, and the buyers are actually there, as you can see by the activity. And in many neighborhoods in London's surrounding region, prices have actually very much stabilized and have not dropped off a cliff. In the GTA, as a contrast though, sales dipped on a seasonally adjusted basis, and the housing price index is down about 5% compared to last year. There's no panic yet unless you're in certain pockets of it or in certain asset classes, but supply is clearly building. The difference, London feels balanced, Toronto definitely feels a little bit heavier, and that tells me that buyers in the GTA are slower to act while London buyers still move when the value lines up. Now beyond the city core, St. Thomas steel and foundation work on the VW PowerCo battery plant are already up. This is long-term job demand, stability, and future housing pressures baked in. In Port Stanley, the Harbourfront Master Plan is progressing this month. Properties near that zone are already drawing attention as buyers are trying to position ahead of potential revitalization. We have a very active site at Landings Port Stanley. We've actually launched the last phase of condos and already in meetings for pre-construction purchases, which haven't really happened in the last couple years. And that definitely signals people's attitudes in places like Elgin County and Port Stanley. Now in Grand Bend, year-to-date prices are flat, but that's actually a win in other places where prices are dropping. You can still fight for value despite what the agents may be telling you in terms of the market being terrible and you have to drop your prices. We've done this on a number of recent sales where we were still able to achieve above average market pricing, but that has to do with different pricing, different marketing, and different negotiation skills. Turnkey cottages are selling really fast, and there's still a huge appetite for lakefront properties. In Bayfield, there was a notable change in approvals for secondary suites, and we've already gotten a whole bunch of messages about that. Dual income properties definitely making things more affordable. But the classic Bayfield properties are still bringing in demand. We were on tour there last week looking at 5 different types of properties and absolutely have a lot of love in our heart for the town of Bayfield. Now let's zoom out by asset class. Commercial and industrial availability sits around 5% with sublease space at a record high. Tons of tenants are making moves and there's good deals out there. Tenants have leverage. If you're signing a lease, make sure to be working with somebody who can use that leverage to your biggest strategic advantage. Landlords have so much more data than you, and you may be thinking you're getting a screaming deal, but unless you're working with somebody in that space, you'll be surprised at how much money you might be leaving on the table. And on the agricultural side, farmland values in Ontario rose 3.1% last year. Growth definitely slowed from boom years, but quality soil near corridors is still trading steadily. We have a number of agricultural sites at primefarms.ca that we are selling right now. From a 290-acre parcel in Nairn that has been stewarded for years and is literally just waiting for the next family to take it over, to sites along the 401 corridor on Westchester Board that are primed redevelopment opportunities. So that's this week's update. The Bank of Canada cut rates, bond yields are steady, and local markets in London, Elgin, Lambton Shores, and South Huron are shifting under the surface of what you may be reading in the headlines. If you found this valuable, hit subscribe, drop a comment, let us know where you're from. If there's any markets you want us to highlight in future updates, happy to do that. And check the description for the insiders link if you want deeper data and off-market opportunities, and I'll see you on the next one.